if you think of the economy and the inflation that we're experiencing as the combination of very strong demand, an historically strong labor market, very solid household balance sheets, strong demand meeting insufficient supply, there are two ways to address that. And again, I'm speaking about this from the perspective of the Council of Advisors. So, you know, this is economic analysis. So you have demand, you have supply. Our idea has been to try to bring supply up to meet strong demand. I think the Fed kind of works the other way. And how do we do that? Well, one thing we want to make sure is that labor supply continues to grow in the job market. I think it's actually one of the most important variables in the economy right now. And we actually have a very solid and somewhat underappreciated trend in that regard. The labor force participation rate for prime-age workers is just 0.5 point below its pre-pandemic level. We actually have the fastest growth in labor force participation of any of the past 5 recoveries. Of course, that's out of a low trough, but that's helpful. And then there's our work in the ports, our work in the oil markets, our work in competition between industries, trying to help family budgets deal with these elevated challenges.
Let me ask, do you think the wage inflation that we've seen to this point has peaked? Are we going to see, demand for higher salaries start to come down from here or not?
I think whenever you have a labor market as tight as this one, we all know that there's a 3.6 unemployment rate. I think what people might have missed from a report about a week or so ago from the Bureau of Labor Statistics is that there are 17 states out there posting their lowest unemployment rate on record with data going back to the mid-1970s. And under those conditions, workers are going to have strong bargaining power. And by the way, that's a real value at the heart of Bidenomics, always has been. At the same time, you've got firms with strong pricing power. And I think that's another way of explaining the current inflationary dynamics. Now, as the labor supply increases, we should see a better alignment of labor demand and labor supply. And that's certainly comments that you hear from Fed Chair Jay Powell are also in a similar vein. So that's, I think, one way to understand those dynamics.
Senator Elizabeth Warren was out yesterday on the talk shows and was pretty vocal about the idea that she thinks this inflation is such a problem that your party, her party, will lose in the upcoming elections if they don't do something about addressing inflation. I don't think there's much quarrel or quibble about that. It's got to be the #1 issue on voters' minds right now. But her suggestions for how to deal with this, I don't think, Jared, would be suggestions you would go along with. She says that a lot of this is because of price gouging. She wants to see the FTC have the power to go ahead and investigate and then prosecute companies that they think are price gouging. And second of all, she wants to see student debt paid off and thinks that the president has the authority to do that, to forgive student loans that are out there at this point. Would you go along with either of those two issues?
Let me reflect on that excellent question. So first of all, you said if the administration isn't doing enough to help ease inflationary pressures. I guess different people will have different answers of enough, but I've never been part of an administration that has tried to do more to help working households get by in this period of elevated prices. Our work in the ports, container dwell time, something I never talked about until I got to this round of the CEA. Container dwell time is down by about 50%. Shelves are generally well stocked. I mentioned the labor supply story. When you get to issues of industry competition, that's obviously something the president has actually leaned into pretty fulsomely. The idea is less about price gouging and more just about simple Econ 101. Look, if there's insufficient competition in an industry, price levels are going to be higher there, and we see lots of evidence of that. So what we'd like to see is a lot less barrier to entry in some of our key industries. Now, on student debt, here's something people also don't know enough about. This administration, working with our education department, has already provided $18 billion in student debt relief, reaching almost 800,000 people. People who were defrauded by for-profit colleges, people who maybe became disabled and thereby couldn't pay back their loan the same way, people who got public service loan forgiveness. We are working diligently to try to do all we can to ameliorate that pressure as well.